morning, everyone. I want to welcome you to our workers' comp webinar today, Mastering Workers' Comp with Relevant Case Studies. This will be a good one. My name is Anae Augustini. I'm CEO of CID Insurance Programs. And I want to introduce Lexi Johnson, our work comp underwriter. Both of us today are going to be your instructors, but Lexi is our expert in work comp. And then I want to also introduce Jacob Cole, who's our lead marketing specialist, and he does everything from behind the scenes to make sure that our webinars go smoothly, and you guys have all the marketing tools that you need to write new business. So let's get started. Okay, of course, let's first off the logistics. You will be muted. You'll be able to hear but not speak. And so your voice is important to us. So please, as we go through, please put your questions into the chat room, and we'll answer them as we go through the webinar as we see them. But please don't hesitate to ask a question, because that's how we all learn, and and we want to make sure that we are answering anything question mark that you have in your head. Also, we have a short survey at the end, and we'd really appreciate your feedback. So what's our objective today? Well, in general, we want to sharpen your knowledge of workers' comp. That's always such an ongoing thing, so that you can be better and better and be able to write larger accounts as you go forward in your work comp knowledge. We're going to talk about 3 case studies that will help you understand how to look at a risk and identify what you need to know and information that you needed to deliver to us to determine what you have. And how to better understand and effectively compete in the workers' comp arena, that becomes all of the information, the case studies, all of that is going to allow you to be more confident and compete. So I'm going to get started by talking about a small versus large workers' comp quotes. So small policies workers' comp policies are easier to manage. We can do faster quotes because we could do those all in-house. It doesn't have to necessarily be underwritten. It's more of a cookie cutter. The application process is simpler because you're not dealing as many class codes, and so that makes it a lot easier. Payroll is usually small. Number of employees is usually small, and so that's an automatic. Also, the types of businesses, it's usually Main Street America, where you've got these small businesses that are more of a cookie cutter type, and so it's the carriers have identified all of those, and it's easy to get fast quotes. The payment options are a little more limited in this area, but you definitely, because you're not going to have big premiums, but the pay-as-you-go option might be available depending on the size of the premium. So gathering the right kind of information is really important. So both small and large, you do have to gather a lot of the same information. However, when you get into small, as I've just gone over, is a lot easier. Large gets a little more complicated because you're dealing with more class codes and maybe experience modification that you're dealing with. You're also going to have more claims history, because the bigger the account, it's inherent that they're going to have some claims. So gathering all of that information is there's a little bit more going into the large accounts, and Lexi's going to talk about that as we go forward. But all of this that I'm talking about is understanding this better, and the case studies will help you. That's what's going to make you better than the competition. Excuse me. So let's talk about small business, and we're going to do our case study in just a moment. So Small businesses, as I mentioned, are easier and faster to quote. What typically qualifies as a small business submission is going to be your Main Street America. As I mentioned, the carriers are definitely out there. They've identified those easy to quote small businesses, and so it's so we could quote those same day for you. So it makes a lot of sense. Other factors to consider on a small premium account: you're not going to get carrier services that your larger policies are going to get. You're not going to get loss control services. You're not going to get claims management services offered because you just don't have the exposure to warrant it, the expense on the part of the carrier. It's also important to note with small premium accounts that you're definitely, depending on the carrier, there usually is some kind of payroll minimum or possibly employee count minimum, such as one full-time employee, that you really need to consider because the very, very small companies might have to make that minimum in order to qualify. Okay. So here's our first small business submission. And this one happens to be a contractor. It's East Bay Pavers, okay? So I'm going to start. We're going to walk down this, and I'm just going to give you a little bit of a lowdown on how I would approach this and the important things that you need to know in order for you not to have problems with the accounts later on. And work comp can have some serious problems if you miss some of the marks on this. First thing, we got the named insured. So entity type becomes important. It's not up on the screen, but this happens to be a corporation, and we have one shareholder, one owner, 100% shareholder of this particular company. So it's very important for you to determine the entity type, and then to know how many owners that there are and what percentage of ownership. But if it's an LLC, there's a different set of rules. Sole proprietor, there's a different set of rules. Why am I mentioning this? Well, the laws that went into place, I think it was like 5 or 6 years ago, with the restrictions with the rules, the regulations for exclusions of owners. This is where we have seen nightmare problems occur, and they're definitely caught at audit. So that we want to get it right at the front side. So most owners typically, but that's not always the case, want to be excluded. And so you have to, if that's the case, and there are rules for who can be excluded, what percentage of ownership, if it's a corporation and LLC and sole proprietor, et cetera. And so we will give you the forms once we have the information about the entity and the ownership when we provide quotes to you. However, it's really important that form has to be filled out correctly and submitted back in order for you to be able to adequately, properly exclude an owner and not get caught on a audit at the end of the policy period, which is it really is a problem because you can't go back and fix it at that point. So locations, we have one location. The only thing I want to mention here briefly is that you need to list all the locations that the employees go to work full time. So in this case, in a contractor, there's they have one location for the business, and that is what would be listed. The employees actually will go to work on other job sites, but they're not permanently going to any one job site, 24/7. For the whole year. So that's why there would only be the one location listed here. But if you have an employee that maybe they were doing maintenance and they go to one location every day, 5 days a week, then you would want to add that location so that if they were injured there, you would be able to have coverage. This can be a problem if there's a claim and you haven't listed all the locations. And then employee count, we have 2 full-time employees. We do not have an experience modification here. And that's because this is controlled by the Workers' Comp Bureau, and they administrate this program, and they have a minimum criteria that you have to meet in order, and it's driven by payroll and premium, and they have this calculation I'm not going to go into that determines. So they don't meet that criteria. They may someday as the company grows, for sure, but they do not have a modification factor that we have to be concerned about. Their payroll, there happen to be 2 class codes, and this is interesting. You need if you don't know about payroll, you can definitely look it up on the Bureau's website, and that's definitely and Lexi can help you with that as well. But in this case, it's interesting. There are 2 employees. One of them, it's the same work being done, concrete and paver driveway installation. However, one of them makes less than $28 an hour, and the other makes more than $28 an hour. So that it has to be, there's a different classification and a different rate for that, and so it needs to be broken up as such. So important information to note. New ventures are definitely acceptable for I believe all of our carriers, or most of them. However, you need to be able to show that industry experience. We have that 7 years here, so that would be acceptable to most carriers. There might be some additional questions that the underwriter might ask, and that would be something like, do you work below ground? Describe your last project, residential or commercial work, what percentage of each? Or are you using subcontractors in your work? So all of those are pretty typical questions that might get asked, and so those are interesting things that those are underwriting questions that you could ask when you're starting that preliminary meet and greet with that particular insured. Okay, so I'm gonna pass this on to Lexi and allow her to go forward with a larger business submission.
Okay, thank you, Renee, and thank you for joining. I do see we have one question which I was just gonna briefly respond to. It was, how does pay-as-you-go work, and does a bookkeeper make payments for clients? So I've seen, it depends on the carrier. I've seen it as precise pay or pay-as-you-go. But basically, pay-as-you-go, it calculates workers' comp premiums from actual payroll figures that you submit, and then they automatically include state-mandated assessments, taxes, and surcharges from the state. And as I mentioned, it does depend on the carrier, but I've seen it reported by the policyholder, or I've seen the payrolls reported by an approved payroll service provider, which yes, some carriers, they provide a list. So,
and typically, Lexi, most policies have traditionally been set up on what stipulated pay, whereas if you say this is going to be the total premium for the year, we're going to break that premium up into a deposit and a 10 pay, and so that's how it's been traditionally done. So in the last 5 years, we've developed this pay-as-you-go plan, and most carriers now have it, and that's what it's the ability to pay for exactly the payroll that you incurred.
Right. Okay, so we're going to move on to a larger business submission. This is under the name of auto collision repair, and I'm just going to briefly go through it, but this risk has 2 locations, which are located in Los Angeles. And location is something to take into consideration because the rate per class code, it can fluctuate depending on the territory of where the business is located. So Los Angeles, unfortunately, they do have a higher rated territory. So this account, they have 24 employees, which is a pretty large amount. And of course, on the initial application, you're going to have to also include the number of part-time versus full-time employees. And then here, the experience mod is pretty high, 240%. So based off of that, we can come to the conclusion that they're being penalized from claims and possibly they could have continuous claims on their account. Of course, I will review that when this is sent over. But also they could be being penalized from claims that happened 3 years ago, because it's always a rolling 3 years. So, but basically what that means is that they're being charged 140% as a debit on their policy. So it is going to hit them. But based off of underwriting review, I would just make sure to have a detailed loss history for the past 5 years, just so I could review all that information. And I'll go into a little bit more detail about that later. But here they have 2 classifications. They have the 8389, which is just the automobile repair classification, and then the 8810, which is the clerical office employees. And then their premium is pretty high. It's at almost 80,000. So what do we have here? It's actually an automotive body repair shop. They have 1 accountant employee, which is being classified under that 8810, and then they've been in business for about 5 years. So I'll cover a little bit more details on the next slide. Okay, so I just want to mention, if you do want to play in the big arena, you have to be on your game and know the details on the risk down to the T. And this will create a much smoother underwriting process, and then in return, you'll receive a quote, hopefully in a timely manner. So upon my review, I of course have to ensure we have all the proper documentation in order to review, analyze, and then also quote the risk. So as I mentioned, loss history, it is a priority due to the high experience mod. And then one point we can definitely agree on is that they definitely need to get their act together when it comes to loss control. And with the right carrier, as I mentioned earlier, they could turn this around. So they have 6 claims, 3 are open still. And something else that I take into consideration is they've been with 3 carriers within the last 5 years. So I would probably turn around and ask, were they non-renewed in the past due to claims? This is probably something important that you should include on the application. You know, why did they move carriers? And then I would also require a supplemental application. And most of the time for any large submissions, you'll have to fill out a supplemental, just asking additional questions. For this account, I too would request an experience mod worksheet. And then, of course, the completed ACORD application. So also, when you run into these larger submissions with a lot of claims, it would be helpful to have a conversation with the insured beforehand, and you can include it on the application when you submit it over. But what's going on with their operations? You know, why are so many claims occurring? Have they put any safety measures into place since the claims happened? And also the carrier may ask if the employees that filed the claims are still working there, and so on. So just make sure to gather as much information up front as you can. And then just something to mention, if you have a good submission, meaning a complete submission, we can normally submit this to our markets right away. Most larger accounts like this, for example, they would be referred to underwriting management for review, but if you have everything upfront correct and you know, you're not processing multiple payroll changes or there's information missing that will cause a delay in the quoting process, we can normally get this quoted right away. We do hold great relationships with our carriers, and we are able to negotiate with our underwriters in getting a good competitive premium. So based on this, overall, we were actually able to quote this within 4 days, which is a really good result, especially with everything going on. And then we were able to bind it right away. So normally larger accounts, they can take a little bit longer to bind, but for this account, because it was submitted complete and full to us, we secured the bind right away. And then moving on to the next slide. Okay. So your businesses that will qualify as a larger account, those are going to be those higher risk accounts. So possibly more accidental exposure, potentially higher rated class codes typically, which of course will result in a higher premium. And a lot of what we see coming in the door is actually manufacturing and contractors that can kind of get into that larger state because they may have multiple locations, they may have out-of-state exposure, or they could have multi-state exposure. So mostly all the carriers that we work with, as Amy mentioned, they do offer many additional services for large accounts, such as loss control, claims management, and then they have many online resources such as safety videos, employee disclosures, etc., that you don't have access to with smaller business accounts. So that is something that you'll want to always check with your underwriter on. So you can always ask me, because this is something that you'll want to promote the services to your client when presenting the proposal. And then when presenting the proposal to your client, you obviously should make it very professional, present, as I mentioned, all the services and competitive placements for them. So, for example, I always take a risk to multiple carriers that we are appointed with, of course, within their appetite. So I will present to you our placement findings, which you can include when presenting to the insured. And you'll want to create and present a formal work comp proposal to your client, and I recommend breaking down the net rate, which includes all credits and also the experience mod. This helps your client because you're providing the actual rate, so they can consider the most competitive premium. And we actually have proposal Word templates on our website that you can download, and you can use them to present to your client. And I believe Jacob will be sending those out to you after the webinar. So before we move on, one last thing. I want to add a good complete submission, whether it's large or small. It can take the same amount of time and effort to underwrite. So the key is to have a complete and detailed submission and know what information you need to obtain prior to submitting it. And then in our previous webinars, we've actually described what a good submission should look like, and we have those recorded webinars on our website, which is CIDinsurance.com. Okay, so workers' comp renewal case study. So when it comes to your renewal book, systems are the best way to manage your renewals. In our office, we have multiple renewal systems that we follow, which helps us stay on top of our renewals and also retain our book. So the goal should always be to retain at least 90% of your renewal book. And one of the many important factors is also working off of an expiration list. And this helps you when you track your renewals for that month, and also reaching out to accounts for upcoming months. And on our website, we actually provide many tools to our brokers. So we have an Excel renewal expiration report that you can download and use to manage your renewals. And another example for a system that we use for our renewal book is we actually follow a 60-30-10 renewal process, where we basically touch base 60 days from the effective date. We begin marketing the account and getting updated information, and then we send a proposal to our broker 30 to 40 days in advance, and then a reminder 10 days in advance. So these are just a couple of examples of systems that we follow, but they have helped tremendously. And then through the renewal case study that I will go over, I'm going to address important factors to watch out for, but also the impact that can unfold. And it also ties with knowing and just understanding important underwriting information when you're working your renewal book and maintaining the needs of each policyholder. So lastly, from an underwriting perspective, briefly audits. They are where I see some of the biggest problems. Audits are mandated by the state. So all accounts are subject to a premium audit. And it's important to remember when the policy renews, it's actually not done at that point. The insured's going to have an audit that they need to complete for the expired policy. And then you want to just make sure the insured complies with all those requirements.
So Lexi, we have a question, and I think you would probably be the best person to answer it. Oops, I just lost that question. There it is. What is your, I think there's two now. What is your minimum fee to the client, and can we charge a broker fee?
So our minimum fee, of course, it depends on premium. It depends on the account, and also depends on placement. But we're very fair with our, I think you're referring to our wholesale broker fee.
Yeah.
So yeah, it is based off of premium. So, and you can charge a broker fee on your accounts. And we actually have a broker fee agreement that you can present to your client on our website as well.
And then our second question, so policies that are pay as you go are audited?
The policies are pay. So yes, they are audited, but normally the audit process is very simple because they've been submitting actual payroll records throughout the entire year. So when they're audited, it's a little bit different than a policy that, let's say, was put on estimated payroll for an installment plan throughout the year. Okay, I think that's all of them. Okay, so moving on. So this is the renewal case study. Oh,
sorry, there was one more question. Sorry.
Oh, okay.
A lot came in all at once, and there. Oh, okay. Do you have any opportunity to quote ourselves and then submit to you? At the present time, we do not have a quote system, so we would just need a court submission.
Mm-hmm. Okay.
And what's the commission percentage? That varies as well, doesn't it, Lexi? And so it will depend on the carrier, but we pay respectable commission.
Mm-hmm. Okay.
That's the last question.
So I think that was all of them. Yeah. Okay. So here we have, this is for renewal. So we have a family-style pizza operation under the name of Number One Pizza. Here it's located in Villa Park, California. The entity is a corporation. So one thing I would definitely confirm is that we have those signed officer exclusion forms that NA was referring to earlier for all three officers. And I would ask the question also if there's been any ownership changes, because you might have to update some of the forms. And then here we just have the standard restaurant class code 9079. They have an experience mod of 81%, so they'll be receiving a 19% credit. And then their premium is on the lower side, around $5,000. So this business actually has been operating for a while, but we have actually only had this account since 2018. So when I was quoting it, of course, I needed loss history and completed a court application just confirming their business operations. Also, being a restaurant exposure, most carriers, they accept restaurant appetite within their appetite. So after confirming all the information, I would also market this account to other carriers to see if we can get a more competitive rate and premium for the insured. Okay. So when you're working your renewals, you also want to consider changes in the exposure. This is something you will want to ask your insured prior to renewing coverage. Remember, with work comp renewals, you may not touch the account for an entire year. So it's important when it's coming up for renewal to touch base with your insured again. And the best way to do this is actually by, you can update or even complete a court application prior to renewal. So you can have record of any changes that have happened throughout the year. I actually chose Number One Pizza specifically because it was a very clean renewal where the broker completed Accord 130 to me prior to the renewal date with all updated information. And based off of that, we were actually able to update payroll, employee count, and we removed a location that was actually previously on the risk. So based off of that, we're able to present an accurate quote to the broker. And then why is payroll so important? This is something just to keep in mind. Payroll should be accurate throughout the policy period because, as we discussed, the insured is going to be audited after that policy expires. So, for example, if their payroll is much lower during the policy period than their actual exposure, then they may receive a bigger bill when it comes to the audit. So I just recommend checking in with your insured maybe every 3 to 4 months, confirming payroll, because we can always request an endorsement midterm, and their payroll can always be steady with the payments that they're making throughout the year. And then on the right side of the screen, you'll actually see a screenshot. I just included this because this is something that I look at. It's a risk summary report, and it's actually published on the WCIRB. So you can search a policy based off the VIN number, and they give you this history. So specifically for Number One Pizza, you can see their experience mod has been pretty stable, which the last couple of years, they've received a credit on their account. So that's something that I always look at just to see the history of the policy. And then with renewals, you always want to consider competition. Someone's always going to be hunting your policy. So it's important to get your insured to understand that we're actually looking for other markets to find a competitive carrier for them. And the goal is at renewal, we will present a couple of proposals to you so we can secure a bind for the insured. And questions that you may just want to keep in mind when you're working with your insured, how are they feeling about the renewal, or maybe about the quote that you presented? Are they marketing their account to another agent, and are you aware of it? Do they have a target premium? The target premium actually helps out a lot, so we can always try to come in the lowest. And as I mentioned, these are just some questions you can ask your insured. Because in order to retain and close the renewal, you have to have constant communication, or there could be a risk of losing the client. So, and then I think Anne will take it over from here.
Okay. And I'm going to say that last one is the most important. Is always close your renewal. Don't. A lot of people fall short of making sure that the insured actually renews. That part's super important, and you can't miss that part. Okay, so I'm going to be talking about best practices. So it's really just a summary of what we sort of talked about here, but with a little bit more talking. So we say start the new business and renewal process early. As Lexi said, our 60-day, 30-day, 60, 30, 10 system can be used for both new business and renewals, and that's what we do. We use that system in our company, and so it makes it easy for you to follow suit with us. But because you really need to gather your information early out in order to make the process go smoothly and be accurate. And again, as Lexi and I have both talked about, gathering the right information is about the risk is super important. That make sure you utilize our team, our work comp team, for competitive quotes, because Lexi is very knowledgeable. She will point you in the right direction or easily answer a question that you might spend a lot of time trying to figure out. So you use our team because we're here to help you. And then know you're insured. Never assume that you have a bind order. That is one that we're at the wholesale level, and so all we can do is encourage you to work, to make sure that you are working with your insured to get that bind order. That's that follow-up process. So on that note, that's our best practices, and we want to thank you for joining us. If you have any questions, you can still chat them in, and we will, even if we've signed off, we'll gather those questions and send you an answer. Also, please use our website. We have our new website up and running, and it's got lots of tools, proposal templates, form templates, marketing pieces that you can customize with your own information. So please visit the website and find out. Also, we've got lots of recorded webinars on our site. So please be sure to utilize that, because commercial insurance is always a beast, because there's so many types of businesses out there, and there's so many different coverages that they need. So we have lots of webinars on all types of coverage and all classes of business. So Lexi is always here. You see her information on the screen, and then we're ready to start quoting for you today. So send in your submissions, and thank you. We appreciate those that are doing business with us. We thank you for your business and look forward to doing business with anyone who's new to us. Thanks again.